Good afternoon and welcome to the Blue Line Metals Edge here for Wednesday, August 3rd. I'm Phillip Streible, Chief Market Strategist at Blue Line Futures. If you're watching this video on YouTube, if you want to like and subscribe to this video, you'll help us grow the channel. Also, you get notification that a new video has been posted. Additionally, if you need more resources, go to our website, bluelinefutures.com. Sign up for a free two-week trial here. All you got to do is put your contact information in, select which report that you want to receive. We're also building out some additional reports that are going to get a little bit more concentrated in those markets that you love. The one that I'm specifically working on right now is a Tactical Insights. It's going to get a little bit deeper into the precious metals markets, also give you some actionable ideas with it and some key dates, key things that we're looking at. Looking at today here, we did have factory orders and ISM services. Those came out. Both those numbers were a little hotter than expected. 56.7 versus 54 on ISM, and the factory orders were 2% versus 1.2%. The way the markets interpreted it was a bit mixed. You got a few different things that are going on, a couple different narratives besides Nancy Pelosi making it out of Taiwan alive. That really put some sigh of relief in the markets. But additionally on that, those data releases coming out. So U.S. equities did rally on no new conflict here or no new escalation on geopolitics between U.S., Taiwan, and China. So getting that aside here, that data release, though, it was right here on the gold market. So 5-minute chart on the gold right here. You're seeing that breakdown, big breakdown, and we're starting to come back just a touch. So all it is it's very interest rate sensitive. When that data release came out, I saw the Fed Watch tool indicated that at the next rate hike, everyone was prepared for a 50 basis point rate hike. The 75 basis points started to surface a bit with a lot of these Fed officials coming out and talking. And what this did was that heated data made it more of like a 46% chance of a 75 versus a 54 on the 50 basis point rate hike. So metals didn't like it at all. You saw gold sell off. You also saw copper that had another reaction to it. Big sell off here. On the copper market, I would use it as a proxy against a global recession. On the copper, you might want to lean to the bearish side. If you caught the move back up on it, you're under a bid on it, use it as a risk management tool, maybe step out of it. We saw platinum futures. They also got weighed in on that data too, but I think it might be a little bit more Chinese retaliatory, shutting down some battery plants, impacting the EV vehicles. They really want to take an aggressive stance on maybe some tariffs against us for allowing Pelosi to go to Taiwan. So they're playing some games with that. U.S. equities shrugged off that number as they look at it as a rear view mirror number. This is about when it came out right in here. We had the breakdown right at this moment, and since then it's been the grind higher. I think the grind higher is led by lower crude oil prices. Remember, they look at crude as that big inflationary headwind. We saw the breakdown right here, and really the run-up started, and I thought we were going to get a new leg higher on news that Saudi Arabia and a couple of the OPEC countries are only going to raise about 100,000 barrels, so not a lot of new supply coming onto the market at all. That's why that rally was there, and then shortly after 8 a.m. we saw the sell-off go on. So as crude oil futures sell off, U.S. equities are getting a rally, inflationary pressures are coming off, and that's what the stock's like right now, specifically the NASDAQ at the moment. Other news, you got Ukraine's trying to ramp up some more cargo ships coming out. I think it's out of Odessa as far as getting more shipments of grain out. So grains are all under pressure here today as well. That's another inflationary headwind. Back to the report here, I did outline like on the gold market, key level support just below 1700. Few things we're watching. 50-day moving average, that's one of the resistance point. We failed up there, and then also this downward trend line. What I don't like is that on the ADX, which is an unbiased tool that measures the strength of the trend, that is also weakening. You do have the DMI plus, crossover DMI minus, which is a bullish indication, but you just don't have that separation like what you saw, right here. If you could get the separation going and the widening with this ADX turning back up, you'll see a nice clean breakout. on the gold market here. And then what you'll see is we'll close over 1803. We'll get a buy trigger will be initiated, and then we'll be able to map and monitor this trade. Now, I'd be curious to see how the crowding analysis goes from the commitment of traders report, as the last report was we had a negative 10,000 contract from the managed money, which is one of the shortest shorts in the last 3-year period. So you can see that it kind of went off the charts right here. Technical setup on silver. I think silver is really following the copper market right now. It's quite unfortunate. 54% of crude oil is of silver is industrial uses. You've got fabrication. You've got some other things. As you see copper prices roll over, silver has been tracking that. So ran right up into the 50-day moving average right here. Probably this downward trend line. It broke through it just a touch if you drew one on here, but I definitely don't like this. Definitely don't like the weakening of this upward trend. So if you're in there, if you're up at all, you might want to reduce, bank some profits. We'll start getting some key fundamental takeaways on each one of these metals. I've been mapping them out here on the gold market. I'll start putting some silver specific ones also. The market did trigger on this breakout along, and it will give you, at least our research here will give you some key levels of support. So 1960 on that. Let's see where silver's at right now. Coming back up to it here. We're 1989, and that low, we're going to be 1960. We haven't got there yet, so we're going to have to keep watching that. But I know 1980 was that support level yesterday. Looking back down here, crowding analysis on silver, you have 17,000 contracts short. That'll probably lighten up as well. Copper, that's that rollover that we're seeing right here, and we're seeing more of a breakdown since I updated this chart. And if we start to see this strength in this downward move, it's probably going to take silver down with it. Now here's your platinum. Platinum's interesting. Real nice bottom. Ran right up to the 50-day. You got this downward sloping line. Again, we're going to look to take some profits around this area from the contracts that were bought at these lower levels. Otherwise, it's been more of a weaker breaking out. And you can see it's because of this downward channel that's in place. You got the weak ADX right here. It's really not relevant until ADX gets over 25. Looking at some other things here, you can see we put out a cycle quad map, which tells you where the economy's at. We're really in this level right here. We're going into this low growth, lower inflation. And what's happening is you get a bit of buying. People coming in, they bottom pick when we get there. But what we think will happen is you'll have 3 or 4 more cycles of deflationary pressures, and that should weigh in on the market. Breaking down a few things here, futures performance, you can see on the day gold was up a little bit. Now it's starting to back off. On the year, it's down a few percent. Really, a couple things that I'm looking at too. Correlation matrix, you could see that the gold dollar, big inverse correlation. So dollar shot up pretty strong on that news of those 2 economic reports coming out, and also the Fed would be pretty aggressive on tightening rates. And then finally, day over day volume. You look at yesterday's volume on gold, big spike up. I think it's got to correlate with, if you go back to it, we rolled over yesterday. So that big spike up on volume was this sell-off right here. You had higher high, lower low, and now we're breaking down from here. So expect another big pickup on volume in the precious metals today, but liquidating from those lower lows. So be careful out there, and then reach out to me if you want to check out this report that I'm writing. We're going to make it so we send it to everyone's email box on a daily basis. If you have any questions, futures, options trading, give us a call, 312-858-7303. Remember that futures and options trading does involve risk of loss. May not be suitable to all investors. Good luck, good trading.